Hello viewers, welcome to my channel. I am Hasham Ali Khan. Already 12 problems have completed on financial management. The subject going on right now is financial management. So already 3-4 videos I have uploaded on theory. 3 videos I have uploaded on theory of financial management. Then starting 12 problems also I have completed. Mainly in this topic of financial management, we have the problems on computation of cost of capital. Starting few problems we have done on calculating the returns, and then we have started the problems on computing the cost of capital. So before starting the next problem, 13th, I expect my viewers to have a printout of the problems which I have given in the link under my description. Now take the screenshot of 13, 14, 15. These 3 problems I am going to explain in this video. See the 13th problem. Company issues 10% debentures of the face value of rupees 100. Actually, coupon interest will be 10% on the face value. Always interest will be calculated on the face value. The face value 100 rupees, 10%, 10 rupees is the interest. Redeemable at 5 years. So this is the first time we are coming across where we have redeemable debt. So the formula for KD will be different. Previous problems we have calculated KD for irredeemable debt. For irredeemable debt, the formula is very simple. I divided by NP into 1 minus T into 100. This is a simple formula if the debt is irredeemable. If the debt is redeemable, then the formula will be changed. How we can know that the debt will be redeemable? Number of years of redemption is given. This is the first problem where it is given redeemable after 5 years. The period of redemption is 5 years. Previous problem it was not given. So this is the redeemable. Now, debentures have a flotation cost of 2% and are issued at a discount of 5%. While issuing, there is a discount of 5%. So 100 rupees, 5% is 5 rupees. So 100 minus 5, 95. And 2% is the flotation cost. 2% of 100 is 2 rupees. So deduct 5 rupees and deduct 2 rupees. So out of 100 rupees face value, the company is receiving only 93 rupees. How 93? 100 minus 5 rupees discount minus 2 rupees flotation cost. What is the after tax cost of debt when the tax rate is 50%? The T tax rate 50% or 0.5. Now, first time we are going to calculate KD after tax for redeemable debt. Cost of redeemable debentures KD. The formula is KD after tax is equal to I plus RV minus NP divided by N whole divided by RV plus NP divided by 2 into 1 minus T into 100. Now you must know what is the meaning of each of the letters, alphabets. Here I stands for interest on debentures. Always interest will be calculated on the face value. So 10% of 100 rupees, 10 rupees is the interest. Secondly, RV, redemption value. At the end of the 5th year, how much the company will repay back to the debenture holders? Redemption value. If nothing is given, we assume face value. The face value of debenture is 100 rupees. So company will return back 100 rupees to the debenture holder. The redemption value is 100. And net proceeds NP stands for net proceeds on issue. So net proceeds on issue, face value minus discount minus flotation cost. So 100 rupees is the face value. 5% is discount. So 5 rupees is the discount. 2% is the flotation cost. 2% of 100 is 2 rupees. So 100 minus 5 minus 2 is 93 rupees is the NP. Then N is equal to period of redemption. It is 5 years. N is equal to 5. T tax rate 50%, 0.5. So all the values we got it. Simply substitute the values in the formula. KD after tax is equal to I. How much is the I value? 10 rupees. RV 100. NP 93, N is equal to 5. So 100 minus 93 by 5, divide by 100 plus 93 by 2 into 1 minus 0.5 into 100. So 100 minus 93 is 7. 7 divided by 5, divide by 5, you'll get 1.4. Similarly, 100 plus 93 divided by 2, 96.5. 1 minus 0.5 is 0.5 into 100. So if you simplify, 5.91%, this is the KD, cost of debt after tax. So this is the first problem where the debt is redeemable. So if the debt is redeemable, this formula is applied. If the debt is irredeemable, simply I by NP into 1 minus T into 100. That's it. Now see the 14th problem. Problem number 14. A company issues 50 lakh rupees 12% debenture of 100 each. Now see here. 50 lakh rupees of debentures, each debenture face value 100. So 50 lakh divided by 100, you will get 50,000. The company has issued 50,000 debentures of rupees 100 each. The interest will be paid at the rate of 12%. So 12% of 50 lakhs, you will get 6 lakh. So annual interest paid I is 6 lakh. The debentures are redeemable at 90 each after 7 years. Again, redeemable debt, just like the previous one. The period of redemption N is equal to 7 years. And the redemption value RV is 90 rupees per debenture. So how many debentures are there? 50,000 debentures. 50,000 debentures into 90 rupees, 45 lakh. So 45 lakh rupees the company will return after 7 years. The company is in 35% tax bracket. So T is equal to 35%, 0.35. Calculate cost of redeemable debentures. The one point is, at the time of issue, net proceeds, face value is 50 lakh. Is there any discount at the time of issue? No discount. Is there any flotation cost at the time of issue? No flotation cost. So at the time of issue, there is neither flotation cost nor discount. So directly we'll take the face value. NP is equal to 50 lakh. So NP 50 lakh, RV 45 lakh, N is equal to 7, T is equal to 0.35, and interest 12% of 50 lakh, 6 lakh. That's it. Again, we have to calculate KD after tax, just like the previous one. Calculation of cost of redeemable debt, KD after tax. I plus RV minus NP divided by N divided by RV plus NP divided by 2 into 1 minus T into 100. Exactly same. I interest on debentures, 12% of the face value of the debentures. The face value of all debentures 50 lakh. 50,000 debentures into 100 rupees each. So 50 lakh. So 12% of 50 lakh, 6 lakh rupees I. RV, redemption value. At the end of the 7 years, it is given in the problem, the company will redeem at rupees 90 per debenture. So 50,000 into 90, you will get 45 lakh rupees will be returned at the end of 7th year. NP, net proceeds, face value, 50 lakh. No discount, no flotation cost. N is equal to 7 years, period of redemption. T, tax rate 35%, 0.35. Now simply substitute all these values in the formula. I, in place of I, 6 lakh. RV, 45 lakh. NP, 50 lakh, divide by 7. Divide by 45 lakh plus 50 lakh, divide by 2. Into 1 minus 0.35 into 100. So 45 lakh minus 50 lakh, you will get minus 5 lakh. In bracket 45 minus 50, you will get minus 5 lakh. Right? The plus into minus will become minus. So 5 lakh divided by 7. 5 lakh divided by 7, you will get 71,428.57. Right? Denominator 45 plus 50 divided by 2, 47 lakh 50,000 into 1 minus 0.35 is 0.65 into 100. Now subtract. Here it is plus, but in bracket you are having minus. So plus into minus will become minus. Right? So ultimate answer will be 7.23%. This is the KD after tax of redeemable debt. That's it. So 13th and 14th problem completed. Now see the 15th problem. B and C Limited has issued 20,000 12% debentures of 100 each. So 20,000 into 12, 20,000 into 100, you will get 20 lakh. The total face value of all debenture is 20 lakh, 20,000 into 100, and rate of interest is 12%. The 12% of 20 lakhs, you will get 2,40,000. The annual interest is 2,40,000. Redeemable after 7 years, n is equal to 7. The tax rate is 40%. Compute cost of redeemable debentures under the following situations. First situation, issued at par value. Second situation, issued at premium of 5%. And third, issued at discount of 5%. That's it. So 3 different situations we have to calculate KD, cost of debt after tax, KD after tax, right? One by one situation will take. Calculation of KD after tax, redeemable debentures. KD after tax, I plus RV minus NP by N divided by RV plus NP divided by 2 into 1 minus T. I is equal to interest on debentures, 12% of face value. 20,000 debentures of 100 each. So 20,000 into 100, 20 lakh. So 12% of 20 lakh, 2,40,000 I. Then RV. Redemption value. At the end of the 7th year, how much the company will return back? Nothing is given. So we assume face value. The face value will return. The face value is 20 lakh. So RV is equal to 20 lakh. N is equal to 7 years, period of redemption. T is equal to tax rate 40%, 0.4. That's it. Now one by one case will take. First case, issued at par. At the time of issuing the debentures, the company issued at par value. Par value means face value. No discount, no premium, no flotation cost. So net proceeds will be face value, 20 lakh. Now KD after tax is equal to I, 2,40,000 plus. RV is 20 lakh and NP is also 20 lakh. So 20 lakh minus 20 lakh divided by 7. So 20 lakh minus 20 lakh, 0. 0 divided by 7 is 0 only. So the whole bracket will become 0. Right? So 20 lakh plus 20 lakh divided by 2. 40 lakh by 2 is 20 lakh into 1 minus 0.4, 0.6 into 100. So 7.2% is the KD after tax in first situation. What is our first situation? Issued at par value. Now second situation, issued at 5% premium. Premium will be added to the face value. So at the time of issue, the company issued at 5% premium. 100 rupees debenture will be issued at 105. So net proceeds is equal to 20 lakh plus 5% premium. 5% of 20 lakh is 1 lakh. So it will become 21 lakh. So net proceeds NP is equal to 21 lakhs. Now substitute I 2,40,000, RV 20 lakh and NP is minus 21 lakh. So 20 lakh minus 21 lakh is minus 1 lakh. In bracket you are getting minus. So plus into minus will become minus here. 1 lakh divided by 7, you will get 14,285.71. Divided by 20 lakh plus 21 lakh divided by 2, 20 lakh 50,000 into 1 minus 0.4 is 0.6. Now subtract 20 lakh 2,40,000 minus 14,285.71 divided by 20 lakh 50,000 into 0.6 into 100. You will get 6.61%. This is the KD after tax. Two situations I've explained. The last situation is issued at a discount of 5%. Discount will be deducted from face value. So here NP is equal to 20 lakh minus 5%. 5% comes to 1 lakh. So 20 lakh minus 1 lakh, 19 lakh is the net proceeds. Now substitute NP 19 lakh. I is equal to 2,40,000, RV 20 lakh, this is fixed. RV face value 20 lakh. then minus 19 lakh divided by 7. Divide by 20 lakh plus 19 lakh divided by 2. So 20 minus 19 is 1 lakh positive plus. So 1 lakh divided by 7, you will get 14,285.71 positive. Because in bracket you are getting positive, here positive. Here bracket you are getting negative. So plus into minus will be minus C. So 2,40,000 plus 14,285.71 divided by 19,50,000 into 0.6 into 100. 7.82%. This is the KD after tax. See here, totally 15 problems I have completed in these 3 videos, covering different topics of financial management. Starting, we have done the problems on computing the returns, expected return, average return. And next, we have done the problems on calculating the cost of capital. Starting, we are doing the problems on KD. First, we have done KD irredeemable debt. Then these problems are KD redeemable debt, where the formula will be different. So if you are continuously watching all the videos, definitely you will get a good command on the subject, on the topic of financial management. So if you are really interested, watch the video till the end. Don't skip in between and don't join in between. And all the problems are dependent on the theory. Be conceptually clear regarding the concepts, regarding all the topics of financial management. So don't ignore the first 3 videos where I have explained the complete theory, then you come to the problem. Inshallah, we'll continue the next problem in the next video.